But Malaysia's finance ministry says capital markets and financial institutions will continue to operate as usual during the state of emergency. It says the government can support any additional fiscal stimulus if necessary. Now, growth was widely expected this year. Amongst analysts, there's now a note of caution.
I think the state of emergency should be seen not in isolation, but together with the MCO restrictions that were announced overnight. Is the MCO restrictions that's going to hinder economic activity over the next couple of weeks, and perhaps even longer if it is extended further. The MCO restrictions cover the 6 large states, including the federal territories. These account for more than 2/3 of GDP for Malaysia. So what's going to happen is that you're going to have a pullback in economic activity over the next couple of weeks. We think over the month, it will probably shave off about 1% of GDP for the full year. So we have downgraded our growth outlook accordingly. But it's not going to be nearly as bad as the first MCO that was in March and April last year.
Meantime, Brian Tan from Barclays says economic support measures could be on the cards.
So the Malaysian government right now clearly has 2 very big ways that it can support the economy. The first is through fiscal policy. We've seen the Ministry of Finance already put out hints that some form of budget support is under consideration. We think that they could announce an additional 0.5% of GDP, that's maybe around 5 to 10 billion ringgit worth of additional support for people. This would include things like cash handouts, wage subsidies, things that they had implemented last year. The other method that they could use would clearly also be monetary policy. The central bank, Bank Negara Malaysia, meets next week on Wednesday. We think that what's happened now could very likely push the Monetary Policy Committee into considering whether they should cut interest rates by another 25 basis points. And that would clearly also be able to help the households and businesses which will need to take on more debt in order to survive what is going to be a fairly harsh period of social distancing measures. We will likely see more businesses not being able to operate, more workers may be laid off in the current situation. All of this is going to increase the pressure on the authorities, both the government and the central bank, to support the economy further.